In this video, we looked at fixed interest rate versus variable interest rate. That's starting right now.
Welcome to Home Buyers School, brought to you by Brookfield Residential.
Hi everyone, welcome to another Home Buyer School video, a channel where you get the latest strategies, tactics, and tips from home buying experts. And remember, if this is your first time on this channel and you want to get the latest strategies from the experts, hit the subscription button below, hit the little notification bell so you don't miss anything. So today I'm joined by Mushtaba Sayed, Manager of Mobile Mortgage Specialist with TD Canada Trust. And the question we're going to answer today is fixed term rate versus variable rate. So Mo, first of all, I guess, can you describe what is a fixed term, what is a variable, and then what are the pros of going with each one?
Absolutely, yeah, for sure. So let's start off with the fixed rate. So a 5-year fixed rate just means that you have, not just a 5-year, but any fixed rate means that you have now committed to be with the bank for a certain time period, and that's what the term is based on. And the rate is actually guaranteed for that time. So you've gone into an agreement with your lender, and you have gone and you've decided to go with a certain term. They have also agreed to kind of guarantee that rate for you for that time period. The positives or the pro for that is it doesn't matter what's happening around you, right? Your rate will be locked in no matter what. So rates could be going up, they could be going down. Your rate's going to be fixed for that certain time period based on the agreement that you signed with your bank. Your payments are fixed, your rate is fixed, you have no fear of your payments going up or creeping up on you, or your interest rates creeping up. And then it's really good for your monthly budgeting. If you feel like you want to have a strict monthly budget, a fixed rate is the way to go. That way you don't have to worry about impacting your budget and your cost associated with lending. Now our variable rate is very similar. We do have a term attached to that one as well. You could have a 3-year term or a 5-year term. And that term is the term that you've agreed to stay with the bank. But the only thing that's different on that side is the rate can vary. So it's actually most variable rates are a prime minus the discount that the lender has given you. So for example, if the rates today are 2.45, that most likely means that the bank has given you a prime rate at that time was, let's say, 3.45, and the discount is 1%, minus 1%. So it doesn't matter what prime is, you're going to get minus 1 discount for the 5-year no matter where it is. So that discount is going to be locked in for 5 years or 3 years, whatever your term is. And that is what you've agreed to stay with the bank. The pros of going with the variable is you most likely end up getting a lower rate because of the fact there's a safety security issue, but you get a lower rate and it kind of averages, right? So, and also if prime doesn't go up, your rate will be a lot lower than the fixed rate available at that time. But if there is a possibility of rates coming down, you could actually reduce your rate from the time that you've signed it, end up paying less interest. The other positive I feel with a variable is you get the lower rate now, and if you feel that rates are going too quick and you're not comfortable with that, you could always go back to your bank or to your lender and see if you can lock in your rates to see what's available. Most banks have provisions built into the variable where you can actually lock in without being in the variable rate for the whole term. So once again, a lot of benefits for the variable over the fixed, but fixed is also great depending on what the rate is to give you that peace and security and peace of mind.
So when we're talking about variables, is there a cap to how high and how low that variable? So for example, interest rates 2%, but then in 5 years, let's say it jumped up to 10%. Do you actually, like with a variable interest rate, will you eventually end up having to pay that 10%?
Yeah, unfortunately, there's no provision built in for a cap for a variable. So with the variable, you just kind of stay on top of it, all right? That's really what I recommend to my clients. If you want to go with the variable, definitely know what you're getting into, kind of watch where the rates are because they do go up and there is no cap. You have to watch the rates and you have to be comfortable enough to see that it's going to average. But in the long term, variable does do a lot better because the averaging kind of helps you out. But if you're not comfortable with that, I recommend that you go right into a fixed. A variable is a great product for someone who's got some experience in mortgages. Maybe it's their second term, they're going to a renewal and they want to try it out for a bit. It's a great option. But if it's your first time getting into it and you feel like you're not going to be on top of your rates and your budgeting is very, very important to you, maybe go with a 5-year fix or a 2-year fix or whatever the fix was best for your goals. And your lender can be the best to advise you on that.
And remember, if you want to know more about interest rates and buying a home, check out the video above. So is a variable still a good option even though the Bank of Canada just recently raised interest rates?
Absolutely, yeah. So when you're looking at a variable rate, the best thing to look at is see what the discount is off the prime rate, because none of us can really control prime. That's kind of based on the Bank of Canada and their overnight lending rate. But what we can take a look at to see what discount the lender is offering off of prime. And right now we're seeing major discounts. We're seeing big discounts off of prime right now. So kind of watch for that. If you can get yourself a really big discount and that you can lock that in for a certain term, and it's actually way cheaper for you than a 5-year fix today, then yes, it's definitely worth it to go with the variable today. Sometimes you could be 100 basis points lower than the 5-year fix comparable with the 5-year variable. That means that you actually have lots of time, if rates ever did go up, to actually decide what you want to do, lock in, or even stay in it, because you're still going to be lower even with the increase than the fixed rate available. Once again, a great discussion to have with your institution, lender, about your monthly budgeting, what you're comfortable with, et cetera, et cetera.
Does a fixed rate or a variable rate, is there different qualifications for either or is it all the same qualification?
Yeah, that's a great question, Carl. So once again, the stress test kind of depends on if you're going with conventional or non-conventional. So it could, if you're putting less than 20%, then no. If you're putting less than 20% down, it doesn't matter what rate you go with, you actually qualify at the 5-year Bank of Canada posted rate. That's the stress test for that. If you're putting more than 20% down, yes, whatever the rate that you are getting for a fixed rate, they could charge you a 2% premium as a stress test on that one. If you're going with variable, then they go with just a straight 5-year posted Bank of Canada rate once again.
And remember, if you want to know more about the mortgage stress test, hit the video up above. Now, the last question I have is there's this question about floating interest rate. What does that have to do with anything? Or is that kind of the same as a variable?
So floating interest rate is going to be the variable rate, right? So
Okay.
kind of floating just kind of implies to variable kind of going up and down. If it's going to go up, it's going to come down. It's not fixed. It's going to be the exact same scenario as a variable.
Just one more question in terms of variable. Can you actually, let's say you have 5-year variable, 3 years into it, the interest rates are continuously rising. Is there an option to actually turn it into a fixed?
Absolutely, yeah.
Okay.
So for a variable, you always have that. So all lenders have provisions built into a variable. So if you feel you're getting if you're getting uncomfortable with the fact that prime is rising too quick or your interest rates rising too quick, sit down with your lender and explain to them, and they can explain to you what the best way is to lock in to see. But the only catch with that is you could only lock into what's available at that time. So let's say you start off 3 years ago, you won't be able to lock into rates 3 years prior to what you had, but whatever is available today. So you could see if the rates today make sense, and they're still going to be a lot lower than what you expect prime to go up, 100%. Sit down with your lender, lock those rates in. But if you feel like the fixed rate today is still higher than your variable rate, maybe once again have that discussion with your lender to see, does it make sense for me to lock in now even though my rate is lower than the fixed? And then you can have that discussion with them and they can tell you the pros and cons of each and decide from there.
Well, reverse question on that. How about a fixed rate? Could you actually turn that into variable, or you can't really do anything?
Yeah, unfortunately, when it comes down to 5-year fixed rate, there's not a lot of flexibility there. You have agreed to be for a certain term, that is your rate. You have to kind of pay that interest rate for the end of the term. If you want to get out, then you incur what we call exiting penalties or pay-out penalties, et cetera, and they just depend on what the rate is at that time. They could be a lot, they could be a less, but it's something that's not really encouraged by the lender or by the bank, is to break your fixed term, because it does incur cost to you.
Perfect. Do you have anything else to add?
No, I think I'm good.
Perfect. My question for you is, did you use a fixed or variable rate when you bought your previous home, and why? Let us know in the comment section below. Thank you very much for joining us, and we'll catch you next time.
That's another edition of Homebuyer School. Tune in next time for more expert tips and tricks. And visit homebuyerschool.ca to bring you one step closer to finding your dream home. As with everything, it would be great if you like and share our videos. Also, please let us know if you have any home buying questions you want us to answer.